So moving forward from where we're at right now, I will be posting all of the trade setups that I'm taking for sure, and then hopefully Jake will post his too, so we can have all of our trade setups on there. I will try and get Jake to walk through on how he's going to set his trades up, but I'm going to walk through one right now. And these will have a lot of other indicators that I will double check to make sure that they are the most safest trades that you guys can possibly take. If they break down, they break down, but I want to make sure that technically they are very, very, very safe trades. So I'm not going to discuss all of the other things that I check on here. I'll just discuss the things that we're going to discuss today so you guys can have an idea of how to set your own up. I very, very much want you guys to do the homework this week and find some trade setups on different coins on like maybe the daily or the 4 hour and send them to me. I'll double check them for you. Check your homework to make sure that they actually play out. I will double check and make sure that they are going to play out for you guys and let you know what's a good thing for you guys to do, if you should take it or not take it, or whatever is the most clever thing to do in the scenario. But I really want to see how you guys are retaining this stuff. If I need to work with somebody more, just to kind of explain things on how this stuff is going, why this stuff happens. I think once we go over the rhyme to the reason class, it's going to help you guys a lot be able to come up with why this actually happens, from like, the person on the other end of the computer buying and selling, right? Once I specifically go over those things of why it happens and it breaks down and it buys up and stuff like that, it puts a picture in everybody's head of how this is actually happening in a real life basis, as opposed to just looking at these lines on the charts, from the economical standpoint of it. But how I'll be setting up my charts, I'm for the most part a pattern trader. I do use every single thing that Jake uses. I use more things than most people would say is sane to do, but it's more so to check my trades as opposed to confirm that they're legitimate. As opposed to finding a trade, I confirm them to make sure they are legitimate because generally when you're setting up a trade, most of the trading styles that you can use will have a point of confluence that makes it the best part of the trade, because you got to think that there's more people out here that are just throwing money into this, but the people that move the markets are either massive amounts of people coming in, massive amounts of people selling, or the traders, which it's mainly the traders, because most people think about everything you've experienced in FSS and the crypto kinfolk group. Like, people are just buying and holding on for dear life. Maybe having some bad days when they look at their portfolio. Maybe they're having some great days, more great than bad, trust me. But, people are quick to forget about the good stuff that's happened in crypto, for sure. But, after you guys realize that the traders are moving the market for the most part, people who are making money move these markets. You will be moving these markets. You will be part of the winning class of people. And the more I think about this, it blows my mind actually that there's, all this information out there that 9 out of 10 traders are successful at this. I don't think this is that hard to grasp at all. And, to be successful in this is to have more wins than losses, even if that's 51%, and you end up making 1% on your money. That's success in doing this. You're not successful when you're 49% trading. That's not the goal. I looked up stock quotes the other day. It said something along the lines of, it's like the most deterring information. Like, once you look up the stock quotes, it's like, I would never trade stocks ever. It just blows my mind that people have these statements. Maybe this is what I Googled. This one right here. In this business, if if you are good, you're right 6 out of 10 times. You're never going to be right 9 out of 10 times. I'd like to meet this guy. Like, I want to meet this face, not really his face, but just his thought process. I don't know. I think that we're coming to a new age of trading with cryptocurrency. It's a mass adoption of, trading, period. I think these markets are moving a lot differently, because back in these guys' heyday, you had to go to a broker, pay them, half of your month's salary just to get their advice, just for them to tell you support and resistance lines. Like, there you go, right here. You probably want to buy at this point right here, and then they're wrong. Just stupid stuff like that. And it just, we're coming to a new day and age where this is going to be predominant across the world. Like, people who want to do this will make this stuff happen. So a lot of this information that we're learning now was created 100 years ago, maybe even longer. Some of these, I believe the MACD or the RSI was created like in the 1700s by some rice trader from Japan or something. Japan has a lot of great indicators and stuff. This stuff moving forward is going to be really good information. And the reason why I think it's going to come more into play is because in like the 40s and 50s and 60s, don't quote me on this yet, but a lot of this technical analysis stuff kind of went out of play because it stopped working as well. Even in the 20s, when this Wyckoff distribution was created by him because he saw manipulation in the markets. And once different things come in to play, it null and voids a lot of things that you're learning. And it makes things a little bit sketchier of how to move this stuff forward. But if you stay on the 4 hour and the daily and you do just spot trading on this stuff, I guarantee you, I mean, this whole way up that everybody was doing on this, aside from multiple times from here to here. So, I mean, this is me charting it way down here. This is actually when I took that, I entered, this is when I entered right here. It was 11,111. I entered a 50x trade. So I waited. I wanted to take it here, but I didn't, because this looked like a head and shoulders to me, which ended up playing out. I hate head and shoulders patterns. They have to be straight across. A lot of people will start calling out head and shoulders that are diagonal and stuff, it's not the right way to do it. This is a perfect head and shoulders. Shoulder, head, shoulder, break, right? And they're about the same size. Like, when you see a head and shoulders pattern, a lot of people search for it. They try and make a head and shoulders, and it doesn't work out. The shoulders should be about the same width. The head should be about double to 1.5 times the width, and the right shoulder should be the same, width as that one. But a breakout of this, you take the top of the head to the neckline, and there's your move, and it happens. See? So when people tell you that technical analysis doesn't work, imagine how much money you would have saved if you would have bought right here. It came up, and if you had $1,000, you would have saved or made an extra $200 from this situation right here. That is a perfect daily head and shoulders right there. They're rare that they happen perfectly. They're always sideways or diagonal. People are calling them out, and it's like they never play out that way at all. My experience in this one kind of did. Let's see if it did. So they can be diagonal. It's just they rarely, in my opinion, play out that way. And this one doesn't really look too serious there. So let's see. So top of the head to the middle of the neckline. I mean, it definitely happened, but maybe that's it. Okay. So this is why candle wicks and candle bodies are really important, because these patterns, when they break out, you want to make sure that you're doing the bodies of it at very least to the top of the pattern, which I still don't think this is a perfect head and shoulders pattern. Unless we did it from here to here, that's probably more realistic. If we go from the bodies of all of this. So be conservative on your trades. Never try and get the full breakdown of the trade. Go like 5 to 10% less. You can make money every day in this market. You know what I mean? So you don't have to make $1 billion that one day, and I will completely always continuously let you guys know that 5% every day is better than 50% in one day. I say a lot of things that sound super stupid, super stupid. Like I could double money every day, but I just don't. And making 5% in a day is better than making 50% in a day, but they sound stupid when I say them, but they make sense when you put things out. Do try and make it quick, because we're recording this.
Yeah, it's just about the shoulders, like the outside. Where do you distinguish where it begins when you're measuring for the move? So like, because obviously everything is not there while you're trying to measure for that move. So when that right shoulder is complete.
So when you're looking at this pattern, there's, just pretend that this is not here. So once you see this, the price action on come up to here, right? And generally I'm drawing lines, like I draw confluence lines. So when price action breaks out of a little trend line that I have, and if you put this down to like the hourly chart, there's going to be a ton of these that touch, like 3, 4, 5, 6. But if you put the lines, and you won't learn this in another class either, if you put the lines, draw them across, and just start doing this, make them a little bit lighter so they're in the background. And what you're looking for is confluence on this line when it comes up, and it's an important trend when it has resistance and it has support on it. So you would have this line based on here, and this comes up, it comes down, and it creates a neckline too. So you could draw one. I often do this, the candle from here to the candle from here on the body, and then I'll draw a line out. You guys will see this on my chart a lot, just like a channel for no reason in there. What I'm looking for is the, support and resistance on these lines. There's a day trader that has grid trading. He does manual grid trading, and all of these lines are already on there. And when I was watching him trade for like a long time, I knew that he was going to make a trade before he made the trade just by looking at the chart. It's like almost crazy that, all these lines in the background on here, like on his, there's tons of them, and they're diagonal, and it's this grid in the background, these little white gray lines in the background, except for they're all over on his. And when you have that on there, it's almost like where, like where the price is going to go. These grids even help on this chart too. Like a lot of these lines just get pinged perfectly. I mean, I'm not telling you to pay attention to them in the back, but it's it's a point of where a lot of these things happen. If you just kind of look in the background, they're all touching one of those lines somewhere. This is a inverse Head and Shoulders right here. So Head and Shoulders, I don't like doing them like this. A lot of people do. They'll play the whole thing, and you know, it's basically false breakouts that whole time. Kyle, you got to watch the first two classes. I know you came in a little bit later. There's a lot of content. It's like 4 hours to each one, but we did a Trading View basics class essentially, and went through and showed you guys how to do this. So if you see this menu bar, anyways, you go here, you click on it, and then you click, and then you can draw a line. All of the technical patterns that we're going to go over, we're going to get into. Elliott Wave will probably be the last thing that we learn. I don't use it often, and you want to use it on higher time frames. The stuff that we're going to teach you guys, if you do it on the higher time frames, like it's almost like you can't lose, really. I mean, the stuff that I do, the way that I trade is really risky. You could lose more money that way, but if you just did this on the higher time frames and applied these same skills and trade abilities that we're going to be teaching you guys, it's almost impossible to lose. It's possible, but statistically a lot more possible. So you see how this came up and it cracked that point right there? That's the whole move on this. And you'll not really see this stuff all that much because you had this breakdown right here. This wick comes down to where the head's at. This is a false breakout of another pattern right there. So the reason why I know that's happening is we have these. So you disregard this one, and this stuff's going to come with time, guys. Like you won't see patterns like this often that you'll win. Right? And you don't want to get used to looking for stuff like this and trying to make it work. Don't try and make your trades work. Make your trades work for you, period. That's it. Or you're going to lose a lot. You don't have to be in a position all the time. It's way better to just take your time. When this blue line right here crosses that red line, we're going up. So we'll put this on the weekly. So this is the other thing that I was saying earlier is the divergence that we have going on right here. Actually, if you draw this through, that line's a little thick, but this just everything I keep looking at on this weekly, like this looks like we're at the bottom. This is the bottom right here. The alts don't look like this though. A couple of them do, but it doesn't look that great. Actually, I'm going to talk about one more thing before we start getting into the normal class here. Let's go to so this is you guys should all have this one starred on your guys' chart, added to it. I usually star them on my phone, but you can add it to your watch list by coming up here, clicking on it, and then clicking BTC.B. And then there will be a plus button right there. And then you can go to the symbol. You can remove them from here. If you guys want to take screenshots really quick, I will scroll through my watch list if you would like. All these red ones are not active. sorry if you guys are not writing these down or I'm going too fast or something. You can just replay the video and come back to this point. I would highly suggest to just take, you know, an hour or two during your day and just going to put all of these charts on your trading view that are listed on Binance. And every time they have a new coin put on there, put it on there and you can chart them. And once you put these charts on there and I teach you guys how to set alerts and stuff, you'll just have alerts coming to your phone when it's like game time. You know, like that's what I did for the last year and a half. I had all these trades set up when they were going to break out, you know, and I would set it up, hook it up to my phone. And even when I slept at night, I would link my phone to a Bluetooth speaker. So it would go off and it would wake me up in the middle of the night. And I would pop into the trade, set a stop loss, wake up in the morning with, you know, 10, 20, 30, 40, $50,000 more. You can also go through and do all the perpetuals too. It's smart to look at the normal trade before you look at the perpetual though, but the perpetual will get you more accurate prices, but the structure of the actual trade will tell you more accurately on the USDT or USD or TUSDT or the BUSD. There's a bunch of them, Terra USD, lots of stuff on there. This Helium coin, which obviously Helium just goes up with no effort or no help, has been absolutely doing numbers when we've been in a bear market. So one to watch, maybe a good one to pop into when everything else stops dropping. And there will be a lot of coins like that too. And we'll get into that point of how you can tell that, what to watch. And that's when you start looking at the fundamentals of a coin and figuring out why and how it's doing it. So this is the weekly Bitcoin dominance chart. When this goes down, that means it's like alt season. So the alts start jumping up. And this is alt season range. And I really do think that we probably will pull up on this a bit. Yeah, when we're down inside of this, these alts are still going to be running up. But if this comes up, if we start moving up on the dominance chart, if you look back at these dates and see what the alts were doing on these days, when it jumped up, they were tanking. They were going down. I can almost assure you that the majority of these alts were doing a number down. So I really think that we're going to see a lot of Bitcoin presence coming up soon. Bitcoin's going to take back the crown, obviously, you know, come to a point where we are getting back to where Bitcoin's booming and taking over the market cap. I thought before that it would take another bull run for Bitcoin to overtake gold's market cap, but I think we're going to do it this bull run, which is crazy to think that we are going to take over a $10 trillion market cap. When you're looking for the market cap, it's under crypto cap. You can go on here, pull that up. It's the same structure that we have on the same structure that you'll have on price action too, because obviously the price action moves down, we go down. Actually on the market cap, this is bearish as hell. And that's what we need to get over right there is that line. I would say that this is one of two things. I would say more than likely it's not this. It's not this bearish pennant that's showing up here. I would say that we are in a descending triangle because the bodies make more sense than the tops. But we could also be sitting pretty in a falling wedge, which is, to me, more likely than not happening. These wedges usually play out. However, it is possible that if you put it right here. So you should always do this. You should make a bearish and bullish case on everything that you're doing, so you can get a good idea of what to do when things happen like that. So make a little rectangle right here. So you can, this is what somebody asked this question the other day, what Jake's area of like his traps that he was posting, like the explanation of where those blocks and why he had them on there is because of this. This is the blow off bottoms and blow off tops that you want to look for. So you can actually gauge where the price action is going, because if you put limit orders inside of these boxes, it's going to put you in a better spot to have a better position than if you're just playing off the body of the mark. But you want to have both of them on there because you want to know that if it breaks down past this by 8 p.m. Eastern Standard Time, if it's not above that, we're in bad territory. Got that on there. And then once you start putting together structure like this and you get a good idea of what you're doing, trading's so easy. I mean, after you know how to do this and you put this stuff on here, which, I mean, I'm giving you guys the gold first, because point and matter is I want you guys to be able to get to it, you know, like be able to get out here and try and save yourself some money and gain more money from being able to do this, and not, you know, slow juke you guys out of your wallet in the meantime. I want you guys to have the gold first, and then we'll teach you all the rest of the stuff. You know, hopefully you guys just stay in the group to, you know, get the trading signals alone and all the other stuff that we do. But this could very well break down. I don't think it will. So we have a bullish candle. Is it bullish or is it short? I mean, this is the market structure. What did that say? That is, close was 667.95. Yeah, so this one's higher. This candle's, I mean, it's kind of bullish, but it's not fully there. This candle, the body of this candle, if this was bigger than this candle, most likely it's bullish. So, you know, this one's bigger than that candle. It's not always the case, but if the candle runs shy of being bigger than the previous candle before, it could be bullish or bearish. Well, here's a case right here. This one is smaller than this one. So essentially you should add a green one next, which we did right here, but it really wasn't, you know, a change of a trend. But I'll teach you guys all these candles as well. You guys will learn those. They're not as reliable as trends and market structure, price action. I personally think that we're going to pull down to maybe wick past this stuff here. I think we'll pull down to right here. I mean, this is on the market cap. We might wick past it a little bit, and then we hit maybe an indecisive day, or we break out. But this next week, so we have one more day before Bitcoin's got to make a decision. So we're either going up or we're going down. And here's the point where you start deciding, you start realizing that you know how to tell the future, because it's like, okay, well, you know, you've been indecisive for way too long, Bitcoin. Time to make a decision right here. This is when the decision gets made. So looking at the total structure on it, and the reason why I pulled that up is because I think that Bitcoin will come down to the 50% mark. 50% and the 618 are the most important on here. All of them are important. 618 is the most important. Fib 5.5, 50% is second most important. And that's where I think we're going to break down to, if we even go down that far, because we could wick down past the 0.618 and then body above it. I mean, I'd have to draw it from up here, at least. The bigger the pattern, the bigger the breakout. So that would be more of it right there. So here's two options that could happen. Well, there's going to be 4 technically. So now either we break down from here, which I'm going to put this back on BLX. This is the main one. So there's 2 points of confluence where we're going to be at. And so within the next week or so, 2 weeks maybe, Bitcoin's got to make another decision. So we have actually it's 3 weeks. So here's the confluence point. It is on June 19th. I actually posted this. If you guys look back at the chat, I posted a chart where it had a yellow line up and down right here on June 19th. And that's when I think Bitcoin's going to drop below if it drops down. If the Wyckoff plays out, I think that that's when it decides to do it. Or maybe not. I don't know. You know, very, very well could be wrong. This is a weird time to be trading. That's the date. Put it on your charts. That's when Bitcoin's got to figure it out. What happened here? Oh, I know what happened. That's what happened. So that price point should be on everybody's chart. And that way it'll give you guys an idea of where the market's going. But I think that it's below this price point right here. I think we wick back up by tonight. I mean, the new day has started, which is on BTC. So actually, that's what I wanted to do in here. So let's look that up. All right, and this is the last thing I'll say before I start the recording in the class, the other one. So let me get these things back on here. Trend line, see, started from behind there. And kind of doesn't perfectly touch, but that's realistically the price points that you want to watch. I'll put this back on. All right, we'll start it from there. So it shows June 15th on this one. Maybe not. Maybe not. So, June 19th again. Yeah. Okay. Good. All right. So to find out what we're going to be doing here. Yeah, we can go all the way up on this. Let's start one from, so we're drawing a trend line. This is from the wicks, and then draw another one from the bodies. All right, so the multiple things that can happen here are we have a breakdown of this price point, which would be from this line, from the body. which would bring us down to 26.9 and some change. Or we have a breakdown from the wicks. You guys don't want to see this happen. So 21,000 and some change. Or what everybody wants to see is, depending on where this breaks up from, which my best guess would be, so this is Monday, Tuesday, I'd say by Wednesday we'd see a breakup, maybe Thursday. So one of these 2 days. If it is Wednesday, then we're going up to 50,000 right here, which would be a really big point because this is a resistance point. And I bet you if I pulled this up on the volume indicator, yeah, see, look at that. Boom. There's a big price point right here. And there's really, so what we need to get up past is 36,000, actually 38,000 and 36,000. There's a lot of buying and selling that was going on in this area. So here's the 2 points. We'll go over the volume indicator eventually too. So this is where that brings us. If we move it over 1 day, that's the same point. It's really no difference. But if we break out from this action, then we're going to hit up to 51,000. So that's the 2 price points. But I think if this is where the resistance is going to be, right here on this one. So I'm locking these in place, and it's really smart to just write yourself a little note on it. You know, this is volume profile, resistance. And just, you know, kind of make a note. Then you can click back on it. I mean, it takes a while to set these charts up in a good manner. So that way they're all good in the background, you know, just sitting there letting you know what exactly is going on. But that way, if you put notes on them, you'll remember what they are in the future, because if you have like a lower time frame, you are going to be sitting in a spot where you're going to have lines all over. I mean, as you can see, it gets pretty messy on here. But let's stop this class. I'll do some questions, and then we can start the RSI and the MACD, which you guys don't have to stay on for. I would suggest you to, but you don't have to. I'm just going to cruise through the class. It's going to be maybe rudimentary for some of you guys in here, but you know, there's, I'm sure, going to be tips and tricks that I go over for you guys to utilize on this as well. So let's stop this recording and do some questions.